Nvidia is scheduled to report its third quarter fiscal year 2025 financial results after the market's close on November 20th, 2024. Many investors are curious whether they should buy Nvidia stock before the company announces its earnings. The days following an earnings release can be extremely volatile. A stock price can jump by 20%, 30%, 40%, or even 50%. Conversely, it can also fall by similar percentages. As a result, investors are grappling with whether to buy before the announcement or wait until after. It's a significant decision, and the timing can make a big difference. Before we dive deeper, make sure to like this video and subscribe to the channel so you don't miss any of my updates and analysis on Nvidia and other top stocks. The first key number to remember for Nvidia's third quarter of fiscal year 2025 is its revenue forecast of $32.5 billion, with gross profit margins estimated at approximately 75%. These margins are exceptional, showcasing Nvidia as best-in-class among tech companies of its size and industry. If the company hits its revenue forecast, it would represent significant growth from the $18.1 billion in revenue and 74% gross margins it reported for the same quarter last year. This implies an almost doubling of revenue and a modest improvement in gross margins. This kind of year-over-year growth has been a recurring theme for Nvidia, leaving investors wondering how long it can continue. Based on market data for Nvidia's products, it seems poised to last for at least a few more quarters. Another critical area for investors to watch is Nvidia's forecast for the next quarter. Last year, Nvidia reported $22 billion in fourth quarter revenue, a year-over-year increase of 265%. While such dramatic growth rates are unlikely to persist, investors are hopeful for a fourth quarter revenue forecast of around $36 billion or higher. Any figure near the current quarter's $32.5 billion could signal a slowdown in sequential growth, potentially impacting the stock price. Investors should also pay attention to Nvidia's comments about its Blackwell technology. Updates on manufacturing ramp-ups, supply chain adjustments, and demand could provide insights into whether Nvidia can sustain its growth trajectory. For instance, a surprise announcement about exceeding supply expectations due to robust demand could boost the stock price. Additionally, Nvidia might share early details about its next-generation technology, codenamed Rubin, which is expected to launch in 2026. Positive updates on this future product, such as strong demand or a smooth manufacturing plan, could also uplift the share price. Lastly, geopolitical concerns may arise, especially regarding U.S. protectionism and manufacturing risks in Taiwan. Nvidia has previously reassured investors about its contingency plans, but additional details could provide further peace of mind. To answer the big question, do you think you should buy Nvidia stock before earnings? Currently, the stock is trading at a forward price-to-earnings (PE) ratio of 54, which, compared to Nvidia's expected earnings growth rate of over 50% per year for the next 5 years, indicates the stock is significantly undervalued. I recently conducted a discounted cash flow (DCF) analysis, and my intrinsic value estimate for Nvidia stock came out to $314 per share, further suggesting it's undervalued. This analysis reinforces my conclusion that Nvidia stock remains a buy. However, whether to buy before or after earnings depends on your risk tolerance. High-risk investors might prefer to buy before earnings to capture any potential upside. A more conservative strategy would be to split your investment, buy half before the announcement and the other half after. This approach helps balance the risk of missing out on gains with the opportunity to buy more shares at a lower price if the stock dips. Our thoughts here in WealthWire, and we hope you share your opinion in the comment section. 2. Nvidia stock is fundamentally undervalued and remains a strong buy. Investing before or after earnings ultimately depends on your risk tolerance. If you enjoyed this video and found it helpful, please like it and subscribe to the channel for more stock analysis and investing tips. Even if you don't follow the framework, it will help you better understand how the stock market works and more insight. Take your investing knowledge to the next level. See you on the next video.